Good morning, everyone. We are coming off a historic day yesterday. Both the S&P 500 and Dow Jones closed at new record highs, with the S&P 500 breaking above the 6,500 mark for the first time ever, and the Dow finishing at a peak as well. However, US equity futures are pointing lower this morning. The Dow, S&P, and Nasdaq futures are pulling back by up to 0.5% as traders trim risk ahead of key economic data releases. This reflects a market that's balancing recent optimism with a dose of caution. And before we go into the stories, I just want to say that thank you for your patience, for letting me take my time to take care of my pet Cory, whom, as you know, we euthanized on Wednesday at 4 o'clock. And I want to personally thank Inf or Sandeep. You know him as Inf on the comment section. Sandeep had come to visit us along with his cousin, and he stayed with us during the entire process and afterwards to offer moral support. So, a very big thanks to him. And I think myself and my wife, we are slowly getting back into track, and our other pet, Ruffian, is still missing his buddy, Cory. But I think by Monday onwards, coming Monday onwards, our live stream will be on and ready. So, with that said, let's go on to the key stories. There are several major companies are shaping the early action today. Dell Technologies shares are down 6% pre-market after disappointing profit outlook, even as that annual projection remains upbeat. Meanwhile, Affirm Holdings is surging over 15% thanks to a profitable quarter and strong revenue growth. Alibaba is trending higher after reporting robust revenue driven by China's booming AI sector, though it faced a profit squeeze from increased competition. Ulta Beauty and Autodesk both lifted their guidance after impressive quarterly results, while Marvell Technologies saw a post-earnings dip as the results fell short of the AI-fueled hype. And in terms of trade headlines, there are still concerns. Tariffs and trade policy uncertainty are creating headwinds for the companies like Caterpillar and Gap, which are warning of inflated cost through the year. And then if you look at inflation and the Fed, all eyes are on the Fed's preferred inflation metric, the core personal consumption expenditure or PCE index. Economists expect annual core PCE inflation to stay at around 2.9%, with the monthly figure expected to be at 0.3%. These numbers will be crucial in shaping Fed policy. Traders estimate an 85% chance of a quarter point rate cut at the September meeting, spurred by Fed Chair Powell's recent hints at Jackson Hole and Governor Waller's comments about a softening labor market. Recent GDP data paints to a picture of robust headline growth, up 3% in the second quarter, yet consumer and business spending are softening, potentially undermining the strong economy narrative if revisions bear that out. Jobless claims remain steady, but a sudden increase could signal cooling employment and reinforce rate cut expectations. Corporate uncertainty is also on the rise, with one-third of executives eyeing job cuts amid unclear policy direction and rising tariff worries. Overall, I would say if you look at the big picture, market sentiment and risks, while the market has shown impressive resilience, especially in tech, also AI and retail. I think business leaders remain cautious. Trade and regulatory uncertainty are keeping hiring and investment in check. Even as stock indices reach new heights, investors today are waiting to see if inflation stays tame or surprises to the upside, which could influence the Fed's next moves and add volatility to today's trade sessions. I'm going to briefly look at the indices, and I'm going to wind up this video. I wanted to make sure I got started today back on the saddle. We'll have videos on Saturday and Sunday as well, and the live stream on Monday, and we get back to normal. So, well, here we are in the TradingView platform. We are looking at S&P 500 futures, which are down 0.34% by now, and they are just on top of the support line of these parallel channel, which has been with us for a very long time. The question is, are they going to stay above that, or are they going to come down? And if they come down, we have some supports. The first support is going to be at around 6,460. Likewise for NASDAQ. Nasdaq is under this line of resistance at 23,762. It's down 0.54%, and it has got a very good support out here, somewhere in the region of 23,426.25. Market sentiment is bearish. MACD is bearish, tending towards the signal line to cross over to the bullish side, but momentum is just above average and dropping. So overall, I think the market is going to probably consolidate and move sideways while waiting for PCE to come through. Dollar index has picked up a little bit, but it's kind of consolidating in a range. It's not going up too much. Yields are all starting to go up. And let us go on to look at the actual indicators and see where they are. S&P 500 is out here, and it could have support today. It could have support today at 6,432.95, and it could have resistance at 6,599.16. Overall market sentiment is bearish, but MACD is improving and momentum is still above average. So things can be good out here. Nasdaq is just above this line of resistance that we had, which was at 23,609.82. It's at 23,703. So this continues to be a support. If the market opens above this, then it's a support, or else it will become a resistance. I think it's going to open below this. We'll see when the market opens. So I would say that the support today is around 23,264. I'm going to change this color to green. So 23,264.83 is the support. VIX is picked up. It's up 1.18% in the pre-market trades. And gold has gone down a little bit. It's down to 0.34%. And QQQ indicates that the market would open 0.50% low because it's down 0.50%. And it's navigating a resistance at 576.02. And it will get a support at around 563.43 today. And that said, I would like to go and have a look at put call ratio, which is mildly bullish. And then we go to look at AI. And in AI, I can see that NVIDIA is down 1.25%. And I had done a good thing before I started looking at Corey's situation. I sold my NVIDIA and booked the profits. So all I have now are the short positions, and they are in deep red. So I'm hoping that they will all start correcting. So we have NVIDIA negative, we have Meta, which is down 0.63%. And as you can see, this is a bear flag. And we have a support at 737.53. We have Google, which has done extremely well so far. Let me do the undo out here, and I'm unable to pull the chart down. I have to find out what setting enables me to pull it back down. Okay, I'll find it out later. But we have a target up there. I don't know what it is, but it's way above. So Google is trying to move upwards, and today pre-market it's down 1.12. But if overall sentiment when the market goes down and the market becomes defensive, everything can go down. And I have some theories about it, and I'm going to talk about that and end this video here. So what I would say is that it's possible. This is just my theory based on some of the news items and opinion pieces and videos that I have been watching during my hiatus recently. I've come to believe one theory which seems plausible. Earlier, people used to invest in mutual funds and less in stocks. And at that time, the industry started telling people that when you invest in mutual funds, you're not getting the full returns because there's a huge management expense ratio, which could go as high as 3.5% to 4%. And people slowly started understanding that. And then came the ETFs. When the ETFs came, that's when this message became that much more potent and that much more prominent. And people who were earlier investing in mutual funds, they were less sophisticated investors who were making money and who had to focus on their daily work, but also were concerned about the future and wanted to invest, but didn't want to watch the market on a daily basis. They were putting in mutual funds, and now they found that ETFs, which were promoted with lower management expense ratios and on the spot liquidity like stocks, found favor with many of those. And slowly ETF became more popular. And as a result of which, people piled on into ETFs, and systematic investment into ETFs started, and money started going from the payroll directly into these ETFs. That's the way I believe it started off. And among ETFs, actively managed ETFs and actively managed mutual funds definitely have more MER because they're buying and selling and doing a whole lot of transaction. Those transaction fees and the admin costs and everything goes up. Whereas a passive ETF just holds the configuration of an index, and therefore the MER is the lowest. So index ETFs became more popular, and people blindly started investing in index ETFs. Now, the side effect, unintended consequence of this good habit of investing on a regular basis is that earlier, when active investment was more in practice, people used to look at the earnings of the company and then price the company accordingly. And there was an industry PE and there was an average PE. Those were the benchmarks around which the valuation of a company would be arrived at based on their earnings. And if a company created a new product line, new earning, and new profit margin that was getting added to the bottom line, its earnings would go up. And with the same price to earnings ratio, the price would be much higher. This was the organic way of the price of a company going up. Now, with the advent of blindly investing into ETFs, what is happening is that regardless of the situation with the company or the economy, money is coming into the market. So whenever the market goes down, more of the units are purchased, and that brings the units back up again, the stock back up again. Therefore, we have not seen a significant correction as such. And now this phenomenon has led to the concept of buy the dip, because everybody is sure that price to earnings do not matter. We have astronomical price to earnings, especially in the Mag 7 and a few other companies. And the belief is that always buy the dip because the stock is going to go up. Now, this is okay as long as there are institutional investors who are also moving in and out of the market. But right now, I think retail investors are holding the bag, and there will be a point of time when the institutional investors would find it very risky to do a quick entry and to sell and to get back. And that is the time when there will be a prolonged dip. And maybe 2 or 3 months of that would make people understand that they can't blindly invest in ETF on a systematic basis. And that's when the drop will come, and it will be significant. Now, when will it happen? I don't know. But for the near term, at least, I am thinking that regardless of the tariff noise, regardless of the inflation noise, whatever, we are going to get this steady money coming into ETFs. The one thing that could upset the apple cart is that if AI-related unemployment increases, and if tariff-related higher costs leads to less demand and therefore layoffs of people causes less people to have salaries, then the amount of money going into the ETFs will reduce. And also people will be selling the ETFs for their daily expenses and to maybe put it into gold or some other place to save value, because suddenly they start looking at the environment and they start understanding with their newly attained free time that the world is not as hunky-dory as they thought. They will be horrified. They'll take the money out from the ETF, put it into gold or put it into bonds or something like that. That's when the equity markets will fall. I don't have a precise day and time when it's going to happen. Friends, I've already put my money into shorts and I'm hurting. So I wouldn't advise shorting the market. The US market is really strong. Tesla also is pretty strong. I've shorted it. I'm hurting. SMCI I've shorted, but I'm doing well out there. So it's a counter by counter thing. I don't know when it's going to happen, but it is going to happen in my opinion. I would like to hear from you guys what you think. Once again, thanks from the bottom of my heart for being with the channel, giving me the time to grieve. I'm back. There'll be videos, weekend videos coming in today. Please watch out for them. See you later. Bye for now.